Welcome back, guys. Welcome back to the Armageddon channel. Here we discuss the collapse of America, apparently, and the complete collapse of the greatest bubble in the stock market and other assets that the central banks have created. That's what we're seeing. So fundamentally, that's what's behind all this, is the fact that coronavirus growth scare is pricking the bubble, and the bubble is predicated on the fact that you have to have continued growth and you have to have continued money printing and easier money and easier rates. That's the bubble that the Federal Reserve has created. And so if you get growth slowdown, then you call the Fed into question. The Fed has to save it. If they can't save it, then the thing collapses. So what are we expecting fundamentally? Well, I'm expecting the Fed to probably come out and do some sort of interest rate cuts and some money pumping. And the Fed has two choices. I've said this, I think my second video that I created, maybe the third one, I pointed out kind of the predicament that the Fed is in, and my whole trading strategy has been predicated on this thesis that the Fed has been boxed into a corner. They did it for themselves, but they weren't willing to let the markets crash in 2008. So what they did is reinflated the bubble, creating an even bigger bubble. And you don't believe me? Well, look at GDP growth, how slow it's been, and look at the stock market, how it's outperformed GDP growth by extreme amounts. And then look at the interest rates and where they've gone, and look at the Federal Reserve balance sheet and look at where it's gone. And you'll see that it's true. Nobody wants to believe they're in a bubble when they're in it because they continue to make money, and so they just think things are great. But the reality is that if you look at the hard data, you would have known that this was true. And the reason why in this video, all I want to do is cover a couple charts. I want to cover the S&P 500, and I want to cover the gold trade. Because it looks like we're coming into kind of bigger picture themes here that could play out, and we want to make sure that we're getting prepared for this. Now, the sell-off that we've seen so far could be the very beginning. So as painful as it's felt because it's happened so fast, there could be a lot more pain to come here in the future. And so we want to make sure that we're at least watching for it. We're getting prepared in case this happens. And the way we're going to do it is we're going to start out with the SPY. So here's your bull market. The purple line has outlined the bull market, okay? I've had this on the chart forever, and even though the market in 2019 was going higher and higher and higher, I kept saying, look, I understand it's going higher, but I'm continuing to look for an opportunity to short because we broke the major trend. And this is a big picture theme, not a day-to-day theme. On a daily basis, I've been wrong a lot of times. But on the bigger picture, the larger themes, I've been right. And here's what I'm talking about. I've pointed out this trend line right here in purple, and I have said we broke that trend back in 2018. All we've been doing in 2019 and 2020 is a massive kickback rally. And if you turn off the trend lines, all you see is this, all-time new highs, and you just don't see it. But if you look at the trend lines logarithmically, like I've been, you'll note then I said, look, I don't care that it's been going higher. I'm still looking for an opportunity to short because all we're doing is testing from beneath resistance. And sure enough, on the weekly chart, here you go. Okay, so yeah, I've been wrong in this kickback rally, for this little move here saying, okay, we should sell off. I'm looking for opportunities to short because we're underneath trend, and this will fail eventually. And the bigger trend, the bigger trade is a lot of movement to the downside. And sure enough, you can see we tested this right here on this week. We overshot resistance just barely. Very next week failed, and the very next week, the start of the bear market. Okay, this is the start of the bear market. It doesn't get any clearer on a chart to show that this is the start. Now we could go sideways. This might be the first week, and now we just chop sideways and chop. But eventually, we're going lower, and that's basically what this chart says. You don't get big rejections and a collapse of the market like this when there's no buy the dip crowd here. Okay, the buy the dippers just got smoked. Every single person that's been buying the dip just got obliterated on the SPY, and they're back to, the stock market's back to prices that it was in 2018. I mean, if you roll back, this is prices back in the beginning of 2018. So all the gains for the last 2 years, basically have been lost in 1 week. That doesn't happen in a bull market. There is no buy the dip crowd. You don't lose all the gains for 2 years in 1 week unless you've just started the next bear market. And there is no more buy the dip. It is now sell the rip. And that's exactly what I've been doing. I trade, so I've gone long. I was long the triple Qs today on the little pop. Put away about $1,500 on that trade, and now I'm looking for, continuing to look for shorts. So again, don't be complacent, all right? Don't be complacent. If you're long and you've been an investor in this market and all you know is a bull market because it's lasted for 10 years, 12 years, whatever, they come to an end and they end quickly. And that's exactly what we're seeing right here. The chart, you can't deny what you're seeing right here in this chart. We go all the way back to this blow off top here at right here. We might find support right here. And they might lull you into complacency by trying to rally it again, making everyone think, oh, thank goodness, that was so painful. I'm so glad it's over. It's not over. That would just be an opportunity to sell whatever positions you have and an opportunity to get short if you want. Okay? So don't be lulled back into complacency. Bear markets don't just fall all at once. They crash really hard and sharp, and then there's a dead cat bounce. They lull people back in. They make them think that it's not over. It's the slope of hope is what it's called. And that's exactly what we should see is we should see a crash. We should see some hope come back. We'll see another crash, see some hope. And it'll just work its way down, most likely down to this 211 or 186. I've got this range. And possibly a lot lower. I mean, if you looked at the CAPE ratio and various things, then really down to, way down here, back even undercutting the 2008 recession would be potentially the end target. And I know that seems like it's going to be a disaster, and that's for sure. But there will be a lot of money to be made on the downside. And then also, if we do get down here and undercut the lows, that is where you want to be stepping in and buying stocks for the long term that will be based off of strength. The economy will be in complete ruin and everybody will be wiped out. And the ones that are able to buy stocks down here will be buying stocks with, from a economy that's hit rock bottom and it now will build up. So that's big picture stuff. But the point is that I've been pointing out this trend line forever and it's played out to the T. Everybody thought I was wrong and saying, stocks are going to all-time highs. Okay, not the case. Now, that's it for that. The point, what I see now is we're probably going to get some sort of kickback rally, some sort of relief rally, and then we're going to roll over again. Let's look at the Qs too. The only thing, there's one last holdout, and that is tech. And the reason why, let me get rid of this line here. And we don't need these lines, we don't need these lines up here. But tech has been the last holdout, and it's the only reason why the SPY even backtested in 2019. And basically what I want to point out is tech has not broken its bull market trend line. This is the last holdout, and let's roll this one back just so everyone can see. Here is your bull market, the red line right here. And you can see we've had lots of reactions along the support line. We undercut it just briefly, and we hit it, and right now we just fell right smack down into it and found support so far. You see this little kickback where we undercut it just slightly and it recovered. So they're going to probably try, most likely this is going to close above trend, and we're going to get a rally here. This is going to start. But the point is the SPY is wrecked. The SPY, might chop sideways while tech tries to do its little rally, but eventually the SPY is going to roll over again, and the Qs is going to break this trend. That's what's going to happen next. So we get a kickback rally maybe, then we get the SPY chopping sideways, doing its little rally thing because of tech, and then boom, it's going to sell off again, and Q's is going to break this trend finally. Just like SPY did. SPY broke the trend back here in 2018. Q's the last holdout. Q's is going down next. All the other indices have broken down. Here's IWM, just a complete false breakout right there. Boom, broke. So all the other indices have pretty much broken down. It's just tech that is hanging in there. Tech's next. And that it's the market tech can't be the market. It's not the only thing, it can keep the market afloat for a little while and then it fails. And that's exactly what we've seen. All right, that's my soapbox for there. Let's look at gold, because gold's the next opportunity trade that I see. The whole thesis behind gold has been played in with the bubble market and also just the market selling off and breaking trend, the technical damage that's been in play. So now now the Fed's in play. The market is demanding that the Fed do something. And you'll see the probabilities of the rate cuts. There's like 3 rate cuts on the table, and it's like 80% probability. The market is you've probably heard it, but the market's basically just been completely supported by central banks. That's the whole bubble. So now they're demanding more, and they're going to continue to demand it until the Fed can't fix the problem. Eventually, the Fed will have no tools, and they won't be able to fix the problem. And I think they're pretty much at that point. But they could try again. And I think the Fed has 2 choices to make right now: continue to support the market using more and more of its stimulus, and that means money printing and rate cuts, or let America go into a Great Depression potentially. Let the Great Deflation, okay? No, forget about the Great Recession. That was nothing. The Great Recession only started to become a recession, and then the Fed stepped in and propped it back up. What will happen now is the great deflation, a massive deflation, which could cause a depression in the country. Who knows? But asset prices have to massively deflate because they've been artificially inflated over 10 to 12 years. So, and even before that, really. But so now the Fed has 2 choices. One, let that deflation happen, and they might, but I don't think they will. I think it's a little too difficult to just idly stand by and let that happen while people are losing jobs and the country's essentially going into ruin. I think more what will happen is they're going to try again, and they're going to cut rates to 0, basically, possibly negative, and they're going to pump tons of money. They're going to inject more stimulus. Why will they do this? Well, they did it before, and it seemed to keep everything afloat, seemed to keep things from wrecking. Why not do it again? So they're going to probably do that. And that's when the gold trade plays out. And that's been my thesis the entire time. Get a massive deflation, get the Fed to step in, overstep their reach, pump a lot of stimulus in, and watch gold soar to the moon. And that is playing out right before our eyes. I mean, there is nothing that's not playing out this way. So let's look at the technicals here. Kind of gone on my fundamental thing. That's kind of been my thesis the entire time. And now we'll talk about the technicals. All right, gold is selling off today massively. Why is that? Why is, when you have a risk-off environment, why is the risk-off assets selling off as well? That is because, and I can't say this for sure, but I can say with a pretty good degree of certainty, there is margin calls going off in the market right now. When all the hedge funds and people who had bet on margin over the last 12 years, it's worked for them. They made a lot of money. They're loaded up on margin, which is taking leverage out on your bets. If you have $20,000 and you get 4-to-1 margin, you've got $100,000 in buying power. And that's what I trade. I trade with a margin account. So they give you a 4-to-1, and you can use that if you want. But if your positions fall 20%, then you get a margin call. And what they do is they basically force you to sell positions to cover the losses. And so they don't allow you to just hold positions and continue to take on losses. And that's what's happening in the market. The market fell 10%, and everybody's levered up. And there's been massive losses. I mean, Apple's down 15%. I mean, everybody's getting margin called who's been running on margin. The calls are coming in, and they're having to liquidate their positions and then cover their losses with winners. And gold is in a bull market. You can see here's gold. Look at this. You've got higher lows. Now we got a higher low right here. And big red day because people are forced to cover all those tech losses and everything else with their winners, which has been gold and gold miners. So they're forced to sell these positions. They're forced sellers. They don't want to sell these positions. They have to sell these positions. That creates opportunity for anybody who doesn't have to sell a winner. Gold right now is a winner, and that's because it's in an uptrend, it's in a bull market, and if you don't have to sell it, then this is a buying opportunity. You want to buy the things, you want to buy the things that people are forced to sell that don't want to sell it. Just like real estate in the Great Recession, people had to sell real estate, multifamily, income-producing properties. They had to sell all that. They didn't want to, but they had to, and they had to liquidate because they were forced to. They were going bankrupt. And you want to buy those assets that people are forced to sell, that they don't necessarily want to sell. And that's exactly how I see this. And so let's look at Barrick Gold. All right, I bought more today. Right down here is our support line. We had a pretty good fall, but it was preceded by a massive rise. So people were taking some profit where they could and locking in some winners to cover those huge losses that they just experienced. But here's your support line. And the point is, we didn't break support. So support came right down to support. It held. It's since ramped up. I added to my position right near support. I didn't quite get it at support, but we saw it run right there and start to move higher, and I added to it right then. So that is, I added to that position, and that's great. As long as this continues to hold, and it should move higher, because gold is a flight to safety. People will move to safety after this liquidation takes place. People should be moving to safety, and all the people who were forced to sell, their shares are going to be bought by people who are not forced to sell, and there is demand there for that. The bull market in gold doesn't end with a crash in the stock market. The bull market in gold ends typically when you have kind of the bottom of the crash, or when you start bottoming out and the fears starts to fade away. Then that's when it ends. But fears fears skyrocketing. Bull markets don't die. Gold bull markets don't die when fear spikes. It just doesn't happen. So this first move is the knee-jerk move. I really think that's true, but we'll see. Silver. This one I actually sold. SLV. This one I did not like. This one, the reason why is we had this, we fell down to support right here. We were at support, we gap lower, and I sold it right at the open because of the gap lower, gap below all the flagging action, and it's since just completely collapsed. The reason why I sold this one, I did take a small loss, about $500 or so, nothing huge, but did lose on that one because silver is somewhat of an industrial metal, and it's not so much the safe haven play. It's got some beta on it. There is some safe haven play, but silver I think is a better performer when you have inflation, when you have a good market. When you have a market that's industrial market that's potentially performing okay, but you're getting kind of runaway inflation. That's when silver really can perform. And if you just have the safety play, silver doesn't do as good because it has such an industrial application to it. It's used for a lot of products. So we're getting a growth scare, and silver seeing that sell off as well. So I'm not a huge fan of that. Now, I could be wrong. Maybe this holds. Maybe this pops right back up. I prefer gold and gold mining stocks over silver. That's why I never have nearly as large of a position in silver as I do gold and gold mining stocks. It's kind of a beta play for me. So let's look at the dollar. Dollar is moving down. So again, gold, dollar's moving down, gold's moving down. Okay, that doesn't make sense. So again, people are forced to sell their gold positions. They're forced to sell it. And this is an opportunity that I think people need to take advantage of. To wrap it up, let's look at this AEM. I'm kind of salivating on this one. I don't want it yet, but I do want it down here at this range, $40. So if we get some more selling in this stock, somehow we get a lot more selling, or it comes right down into here, that for me personally, that's a buy, and that's going to be right at support right there. I'll take something that's in a bull market that's at support and is only down where it's at because people had to sell their position even though they didn't want to. for me, I'm going to take advantage of that opportunity that someone else is, being forced to sell. So that's it for the video. It's really just, the bigger picture stuff, but I want everyone to pay attention. I've been calling for a bear market. I've said we're in a bear market the entire time because the SPY broke its trend right here. And so for a year and a half or whatever, I said, look, I know the market's moving higher. And, yes, I was wrong in 2019 several times where I thought, okay, now we're going to go down. And we did, several times. We went down, I caught some shorts, but it wasn't the big move. This is a screaming red flag saying that's the end, okay? And you don't see these kinds of moves until you're impulsively entering a bear market. And you start the bear market in an impulsive nature, okay? You trap all the longs, and then you give them a little bit of hope, and then you put the dagger through the heart again. And it'll continue to do that till we find some sort of a bottom. And nobody knows where that bottom is, just like nobody knows where the top was at. So a lot of people kept saying, like, you're trying to pick the top. Well, yeah, kind of. I was kind of trying to pick the top, but that's only because I knew we were below resistance. Here's resistance. I'm looking for the end of the bull market because we broke the bull market trend in the stock market. So I'm looking for it, and sure enough, there it is. So again, don't live on hope. Trade the data. Look at the charts. Be smart about it. If you see a rally, which we should get one, doesn't mean it's going to be this week. Next week could be another deathly week. You don't know. But we should get a rally at some point in time. It'll seem like a pretty impulsive, strong rally, and then that is your opportunity. If you wrote all these this big sell-off down, I didn't. But I have been expecting this, then that when that rally comes, that's your opportunity. Don't be complacent and think, okay, it's all over, market's going up. Use that opportunity to lighten up on your long positions, take out positions that maybe do good when the market goes down, and then wait for it. A lot of people, they don't like to take on losses in the beginning, so they'll buy a position. People like to buy when markets are just moving higher. They like to go long like this because they buy and they're instantly rewarded. Markets go higher and they feel like they're right, but that doesn't mean you're right. Just because you bought right here and you were instantly rewarded, you were actually wrong. The bigger move, the real move that's coming, came like this, boom. So it's okay to buy a position and take on a little bit of losses in the beginning, anticipating the next move, anticipating the next real move, the big move. And in this case, it looks like it's to the downside. So again, any rally, I'm looking to add to shorts. I don't have any long positions. So for me, it's just about gold and shorting, but, and I'm looking to, that's what I'm looking to do. So give me a thumbs up, guys. Anybody who's been with this channel for a while, I've been pointing this out over and over and over, and no one's, I don't know. Maybe people believe me. Some have, I think. Some have been, hecklers, but that's all right. They, the hecklers right now think that this is done and this was it, and I've been calling this forever, and yeah, I'm always gonna, I'm gonna be right eventually. Yeah, well, wait till it goes all the way down. Wait till it comes down to here, okay? And when I was saying we're gonna sell off here and here and here, am I right when the market's down here, even though I was wrong when it was up here, right up in this range? Well, again, I've been looking for risk versus reward, right? To me, the reward has been the move all the way down here. The risk, or there hasn't been that much reward on this little pop here when you could potentially get a move that wipes out all the gains, just about for the last 2 years. Give me a thumbs up, guys. Subscribe if you're new. I'm going to continue to do technical analysis on the charts. And, we're going to be trading a bear market now. So, take off your hat, your bull market hat, put on your bear market hat. Thanks, guys. Bye.